as 2025 is slowly but surely drawing to an end, I find this to be a very good and important time to reflect back on the year, not only personally, but also in terms of how I did in the markets and what I learned and maybe what I can do better in the coming year. As I look back on 2025, I think there's really two main things that were reinforced to me that I'm looking to even further improve upon in 2026. One of them is to stay open-minded to any outcome, and the second one is that the trend is our friend. Let's touch on those two concepts. When you look back at 2025 and we look at the extreme volatility we had in the April period, followed by almost miraculous recovery in the markets, once again proved to me the importance of being open-minded. As a risk manager, and most of my peers on the investment management side certainly had to take some measures back in April as markets became more volatile, multiple standard deviation moved, the S&P dropped 20%, volatility spiked, lots of uncertainty, and that open-mindedness to say, hey, yes, we need to take down risk when markets go down, but equally, and maybe even more importantly, to get back in when the recovery is there, or at least when the signal says there is a chance for a recovery, that open-mindedness is really critically important. Now, I will tell you that many investors with less experience in April simply said, I'm going to stay put, as their portfolios were down 30%. And ultimately basically got lucky, right? Better lucky than smart that markets did recover. Now, from a risk management perspective, that's really not a strategy, that it does not stand the test of time, because ultimately markets don't recover anytime soon. And then, of course, all these people blow up their accounts. But as far as my lesson for 2025 is concerned, and what I certainly want to continue to respect even more in 2026, is just to be open-minded. We do not know what's in store for markets as much as we have analysts that tell us every single day they know exactly what's happening. There's very few people that said we could have a record recovery back in April, and then we would have fresh all-time highs again, except a few permabulls which make a living by telling you everything's always awesome. Of course, that's not a strategy either. So to give you a bit of an idea on this, I thought I would bring about our momentum indicator, which actually helps us and helped us factually in 2025 to see exactly that. This is the S&P 500, and you can see the red arrow was a downward movement that then came in the S&P. In fact, the S&P dropped from that point on 15+% or so. The total drawdown, I think, was 20% or something like that. And so that sell signal is what we call a momentum signal. There's very few people that were willing to sell in February. Most people that did sell sold more or less probably at the lows in April, and then probably didn't get back in, right? So this is the open-mindedness. As much as we had to be open-minded enough to understand that the tariff news was potentially catastrophic, and it was if they wouldn't have reversed basically the strategy a little bit. But then the most difficult part was to then basically get back in when, in this case, the momentum shifted back to the upside. And you can see from the point we received a buy signal again on the 30th of April, the S&P ended up rallying as much as 25%. A ginormous move. So, but if one is not open-minded, if I'm not open-minded enough to follow the signals, then I'm constantly basically fighting potentially major trends, which we'll get to in a minute, but also I'm really fighting emotions, and I'm allowing emotions to bubble up even higher, right? So staying open-minded, I think, is a critical lesson for me yet again in 2025 that I want to carry into 2026 as something that I can improve upon. Now, we touch upon trend, right? Now, trends are a totally different phenomena in the sense that trends are something that we need to respect as long as they stay intact. And there's very little better examples that I have that I can give you that's in recent memory than, for example, the trend in gold and silver, and there's other metals too and other things as well that really started all the way back. I'm going to make this a very large chart that really started all the way back in January of 2024. Looking at the GLD ETF, which at the time was about 186 or so, maybe 188, when the green background appeared. That's the beginning of the trend by our algorithm. This happens in real time. This is not a backward-looking statistic. So we received a green background, meaning the trend began in early January 2024. As I'm recording this, you can see GLD is more or less at 400, right? Now, there was plenty of reasons along the way to not honor this trend, right? Get skeptical of it, get out of it, even short against it, right? But the trend remained intact. And so this is the second really big point that I want to make. And again, the lesson that I've once again learned and became, just more and more ingrained in me yet again in 2025 is that strong trends have a tendency to continue until they don't, which sounds a little bit silly. Another way of saying it is the trend is your friend, right? As long as it remains intact, basically until it ends is the way that they express this. And gold and silver and many other things, you can look at NVIDIA over the years, right? Or Palantir, all the things that you know of. Those are extremely strong trends that one just had to respect. Now, the issue, of course, is if we don't have a process that tells us when the trend ends, right? That's when things become troublesome. So I'll give you one quick example of this so you can kind of see what this looks like. So you look at a stock called Novo Nordisk, and I've shown this to clients before. And let's just look at the trend transition. We call these trend transitions over the years. So green background color denotes a bullish trend. Black background color denotes a neutral trend where the odds are neither favorable for or are not high enough for up or downside. And then, of course, a bearish trend is represented here by the red background color. Now, you can see if all I did is buy the stock in December of 2022 around $60 and sold it around 124 when the trend changed, or maybe 120 when the trend changed to neutral, right? That's called trend following. I could have avoided all the trouble in between, all the news, all the whatever. But then I did have to honor the signal because ultimately it turned into a bearish trend. So for those people who don't have a trend following process, they may still own a stock that at some point was worth $147. As I'm recording, it's worth $48, right? So it's $100 less. Right? Around tripping the whole thing. So the trend following thing is really important. And one of our main themes as we head into 2026, in fact, our main theme is, we call it the Great Rotation. You'll find out more about what that actually means coming up real soon. But the Great Rotation is going to be very much in the center, or a core aspect of the Great Rotation is all about trend following, right? And 2026, I think, is going to be one of the years where a lot of people, not nearly enough, but a lot of people that are more in tune with their emotions and markets, meaning that are able to stay unemotional and right, be open-minded and follow trends, are probably going to have a really good year, and the rest of the people, the majority of them, are probably going to have a really hard time for the next, we don't think just 12 months, but probably 5 to 10 years as markets start changing and the Great Rotation continues. So anyway, that is the lessons for me for 2025 and 26. I would encourage you to do a similar exercise, right, where you write down, take a minute, over the holiday period here, over some coffee or a glass of whiskey or whatever you need, quiet time or water, sit down somewhere and really think about it, not just for a couple of minutes, but really take, an hour, think back to 2025, what worked for you, what didn't work for you, what would you like to improve upon in the new year, and how could you stick to it, right? A lot of it has to do with having a repeatable process that you can actually trust. And of course, as you know, that's exactly our theme here at thesteadytrader.com. Hope it helps, and we'll see you in the next video. If this video helped you, please make sure you subscribe to the channel, you give us a thumbs up, and if you want to see this approach in action, you will want to join us in our Set the Market morning call, which happens at 9 o'clock Eastern Time, Monday through Thursday. Make sure you join us for that in the link down below. Again, subscribe to the channel. I'll see you in the next video.